today we have Siddharth Rastogi, our favorite master, among with us. Warm welcome to him.
Thank you, Pooja.
So we'll start with the introduction of our speaker today, and then we'll get back to our topic for today's investment banking in India versus US. Siddharth Rastogi sir has a more than 2 decades of experience in banking sector. He has been eminent speaker for various topics in finance, fundraising, equity, financial markets, banking, and entrepreneurship, and also life topics. He is an author of a book, 8-Minute Decisions, 8 minutes all it takes to change your life, on effective decision making. Currently, Sir is working as a managing director at Ambit Investment Advisor Private Limited. Sir is associated with Ambit Group since last 14 years. Sir has also worked with various banks such as HSBC, Citi, and India Infoline Private Wealth Group. Sir has worked as a youngest branch head of HSBC Bank for one of the biggest branch in India. Also, from qualification perspective, Sir has done honors graduate commerce from Delhi University. Sir has also done postgraduate program in business administration from Narsee Monjee Institute of Mumbai. Also, Sir has been mentoring us at a Masters Union Investment Fund for various investment strategies and our doubts. So, I warm welcome you, Sir, for our today's webinar. This has been the most interesting webinar to host you at this event. So, do you have any comments?
No, thanks, Pooja. Trust me, you guys are the one of the luckiest batch, or the people who are listening here. There is a galore of opportunity. There is mammoth opportunity in the space of investment banking as we speak. And trust me, in last 2 decades, this is the most interesting time to be part of an investment bank, make changes, bring changes in the world, as well as make lots of money for oneself. So we can start.
So, firstly, we will begin with the most favorite topic of every finance professional. What does it take to get into a investment banking?
Let me start with a very interesting quote. There is no secret to be successful or to join any investment bank. The only secret is whatever is the job, it needs to get done. And if you have that attitude, if you have that passion, if you have that charisma to get things done, you are cut out for investment bank. I will break this answer into 3 parts. The first is from the qualification perspective. So I'm sure some of our listeners, some of our young listeners may be undergrad. Some of the listeners are postgraduate, and some of them are aspiring to get into the investment bank. So what it takes. So the first thing is, from an undergrad perspective, you not necessarily have to have any specific degree. It can be any degree. It can be a degree in mathematics. It can be degree in economics. It can be an engineering degree in undergrad. So it really doesn't matter. But the emphasis is that you should have little biasness, little inclination, little interest in mathematics, in economics, or in finance. So if you have any of these degrees in your undergrad, then it's absolutely fine. The second, from the postgraduate perspective, generally you need to have an understanding of the business, because in investment banking you can't say that I'm sector specific. I only understand this, I can't understand that. You have to be a good person to have great understanding. You have to be a good person to have great understanding of businesses all across, how businesses are run, how profits are made, what is the business model, and you have to understand them very, very quickly. And hence, masters in finance, financial risk management, master in business administration, postgraduate diploma in business administration. So MBA degrees, risk management degrees, CFA degrees, all these help for you to enter into the investment banking journey. So that's the second aspect. The third aspect is, so these are essentially your educational or your qualifications, but what it takes. So there are three key skills. There are very three key skills which you need to focus on if you are in your 10th standard or if you are in your 12th standard, and if you wish, or if you are a graduate or a postgraduate, and if you are appearing for an interview with an investment bank, three things which investment banks look for. The first thing, valuation skills. So you need to understand how businesses are valued. Not one methodology, 2, 3, 4, 5, various methodologies, how businesses are valued. So for that, you need to not only study your textbooks, but you need to see the live cases of M&A which have happened in last 50, 70, 100 years, because investment banking history goes as far as 150 to 200 years. The oldest investment banks are over 200 years old, and that's where the history comes from. So you have to read various valuation cases, how the valuations have emerged. So you need to always come out with a perspective on a back of envelope calculation. So let's assume if you have been given a scenario that this company wishes to exit a portion of its business or assets, how would you value it? Or if the company is making this much top line, this much EBITDA, how will you value it? If the company has so much of debt and the company wishes to expand or go public, how would you value it? So all those, so the valuation is one of the core skills, and it should be on your in your fingertips. So you can't be taking hours if there's a problem. Within seconds, within minutes, on the back of envelope, you have to figure out that these are the approximate numbers on which you will be able to raise the money, list the company, whichever way the business is. So that's one of the key core skills. The second core skill is on your emotional quotient. What do you mean by emotional quotient? Your personality. Do you have a personality type? Because remember, investment bankers, if you're building a career, you're not going to stop after 3 or 4 years and exit the investment banking. You are aspiring to become one of the top investment bankers in this country and in this world. And that's why you have to have a personality type. You have to have a very crafted personality, and you need to be a people's person. Because if you're not likable, if you're not able to make good conversations, and if you're not able to understand the perspective of the parties, of the people who are opposite sitting you, then it will be challenging for you to close the deals, because investment bankers do not have luxury of taking too many questions or asking too many questions. You have to give your perspective with the limited information and then keep building trust. You have to become a trusted advisor, and that's when you keep moving deeper and deeper and deeper. So that's the second thing. Personality, communication, that's the second thing. Another interesting thing which you need to focus on is how do you gel around with a team? Because remember, investment banking is a high pressure job. Some of the top investment bankers work for over 100 hours a week. 100 hours a week. So if you leave Saturday, Sunday, you are talking about 20 hours per day, over 100 hours a week. So that's the kind of pressure which one needs to go through. And at that point in time, if you have teammates who are not supportive of you, if you have teammates who are bossy, who are arrogant, how do you deal with the situation? So behavioral or emotional quotient is something which you should look for. So these are some of the things which generally investment banking skills are needed. So first, from the graduation perspective, you have to have a bias towards a little bit about maths. The second thing which you need to ensure that you maths, economics, engineering, so numbers, essentially crunching numbers. On the postgraduate side, you need to have business acumen, and you have to have softer skills plus valuation skills plus communication skills plus a personality. So if you have all of that, you're gonna be right fit for the investment banking profile.
So this has been the most crisp answer for what is investment banking is about and how one can get into. I would ever think of, and definitely I would think this for even all our participants as well. So next, I would like to go for what are the job roles one should look for in investment banking.
Let's understand what is investment banking first. Okay, investment banking is used very, very loosely everywhere. And let me give you a little bit of construct how the investment banking actually began. Investment banking began in United States of America, and till about 1850s, all the commercial banks, and you understand the concept of commercial banks. Commercial banks are like Axis Bank, ICICI Bank, Citibank, Deutsche Bank, all these HSBC banks. So banks which do retail banking, cash management services, loans, advances, they also were investment banking. But from 1961 onwards, there was a shift and they were specialized. So there was a gentleman who was supposed to be one of the pioneers in investment banking, is known as Jay Cook and Rothschild family. So these guys are the pioneers in the investment banking. So during 70s, 60s, 70s, and 80s, 1850, 1860, 1870s, during the Civil War of United States, the government wanted support in raising money, and that's when Jay Cook came in, and then he created an investment outfit, and then he bought all the bonds, and then subsequently gave it to the investors, and that was the humble origin of investment banking. So today the investment banking essentially encompasses four things. First, asset management, which means managing money of people. So that's one of the core areas of investment banking. Second, M&A advisory. So M&A advisory means whether you can be on the buy side or on the sell side, but advising clients what to buy so that your ROE improves, your capital utilization improves, and your EPS improves, etc., etc. So you can be on the buy side mandate or on the sell side mandate. So clearly, whether a strategic sale or a minority sale, it does not matter. So that's the M&A advisory. So that's number two. Number three is sales trading. Or number three, let's talk about first issuance underwriting. Issuance underwriting essentially means debt issuances or equity issuances. So whether it is securitized debt, whether it is bonds, whether it is government bonds, corporate bonds, whether it is primary market issuances in equity, whether it is secondary, whether it is QIP, all those things are done by investment banks. So what is the role of an investment bank? There is a large corporate. The investment bank is clearly a B2B play. So investment bank only deals with large institutions, as large as governments. Some of the largest, so all the large governments across the world are clients of investment bankers. And these guys issue their bonds, issue their equities, or the corporates issue their bonds or equities or any kind of a tier 1, tier 2, tier 3 bonds or prime debt, subprime debt, mezzanine debt. It can be in securitized debt, CDO, CBLO, CLOs. It can collateralized loan obligations, collateralized debt obligations, whichever case may be. All these are issued by the large corporates, large institutions, and then these are underwritten. These are guaranteed for subscription by these investment bankers. Investment bankers in turn talk to their clients and they place. So for large placements, they use this. They use their connects, their approach, their good houses to place these issuances, and they earn a commission. They earn an underwriting commission, and they earn a placement fees in return. So that's the number three. Number four is the sales trading. Sales trading essentially means most of the investment banks also have their prop book, and they take a portion of the entire securities in their prop book. Also, if the issue gets devolved, then they take it in their books and then they keep selling it at profits to their clients over a period of time. So essentially, these guys are the ones who take your bond issuances, your equity issuances, your mezzanine issuances to the market. So these are the four kinds of activities which exist in a typical investment bank. Now, Across all these four, then you have specialized activities. So let's start with the asset management. So asset management will have research analysts. It will have analysts who will do fundamental research, technical analysis. There'll be CIOs. There will be people who will be on the sales side because they need to raise money from the third party, from their clients, so that they can be salespeople. Then you have people who are doing the servicing role and the operations role. So these are the people who are at the mid office, who are preparing models. So these are the various roles on the asset management side. Briefly, if I have to look from the M&A advisory perspective, M&A advisory essentially has again two roles. One is front-ended. Front-ended generally does not go to the juniors because you need to learn the art of investment banking. And as you grow in the system, then you will become client-facing, which means you start pitching for mandates, whether it is IPO mandate, whether it is debt mandate, whether it is QIP mandate, whether it is M&A mandate, whether it is strategic sales stake mandate, whether it is scouting for an opportunity. Whichever way, it is client-centric. So that's the topmost role in investment banking, and that's the mega bucks, where the mega bucks lie. Behind this is the kind of a mid office or a back office where people understand the requirement of the clients. So if a client wishes to exit a business, you do a valuation, you figure out what are the rationale, how will it strategically help other businesses to acquire. So you start figuring out synergies. So you make PPTs, you make business case. That's one of the ways. Second way is the client has given you start scouting for mandate, and there you make a business case, what can be the potential synergies, and then you make a target, make 5-7 cases for the target, and that's where the second kind of role comes in. But in M&A advisory, there are essentially two kinds of role. One is research and back office work, and then there is execution. Now the research and the back office work also complies and does the legal aspect of it. So liaising with the lawyers for signing the agreement, ensuring that whatever clients are saying, their wishes are incorporated in the legal agreements, at the same time ensuring that it's as per the norms of the regulator. So regulatory compliances also need to be taken care of by this back office team. So that's the second aspect. If I have to look for the third, in the bond issuances and underwriting, again, the first role is of the sales, where you go and scout for the mandates, whether it is IPO issuances on the equity side, whether it is on the debt side, whether it is private placement side, whether it is strategic placement side. So you start looking for, first is the sales. The second one comes to the valuation. How do you value? Then you once the mandate, before the mandate comes in, you have to prepare a lot of groundwork, why the mandate should come to you, and then you make a pitch. And behind the scenes, there's a lot of work which happens. After that, there is a team which connects with all the clients as well. So there is something who's known as the originator, and then there is someone who's known as the guys who have the placement capability. So this gets matched. So somebody who originates the mandates, and because these are typically the corporates. And then there is somebody who manages the relationships of the institutions. These institutions where these large lumpy chunks of money gets placed into. So these are some of, and then there is regulatory compliance, settlement, operations to settle all these bonds, then listing of the bonds, listing of the debt, so listing of the equities. So all those are the regulatory compliances which are taken by the mid office, back office, and the operations team. Then comes the fourth part, which is the sales trading, things which are in your prop book, things which are left in your bucket, and where you see arbitrage opportunity. So you can buy from one buyer, and there is a seller available, and the buyer is willing to buy at a higher price, and the seller is wanting, so you earn the spread. So this is known as a typical sales trading, where you eat the spread. So that's the typical role of the sales trading. So emptying your boxes, emptying your bucket, which is filled with the residual securities which are left, plus mixing and matching and understanding the gap. So they are basically they are making, or they are matching both the sides, ensuring that the spreads are there. They create depth in the market. So these are essentially the four roles, and essentially the four jobs or the four profiles which encompass the investment banks, and under this, these are the roles.
Thank you for the major rules which you have been articulated well, and must student must have got the various idea about it. So after getting into IB, how one will succeed ahead, and what does it take?
From the investment banking perspective, there are very clearly three things. First is your reputation. Remember, once the client doesn't make money on you, or once the client believes that you have not given the right kind of transaction, because remember, investment bankers are dealing with enormous amount of money, very, very large quantum, and there is only one or two people who are doing this entire transaction. There is not an army of people. There are only one or two people who are acting as the middleman, and hence the trust between the client and this, if it gets shaken, then you are done with. So the first thing is the reputation, which you have to guard it with your life. Your reputation as an investment banker builds over time. And the more successful transactions you will do, the clients will keep following you, whichever company you will switch into. People will not care about the company, people will look for the person. So that's the number one aspect which everyone should look for. The second aspect is technical know-how. So you need to be master in your own space. You cannot say that I will check and come back. Investment bankers never say that. Investment bankers always have an answer, always. They go prepared, they answer to the T, and they get the mandate. They never say that we will get back. They only say they will get back when they want to postpone the deal. Otherwise, they have all the answers there and then. So your technical expertise, and if not the exact ones, they at least know the back of the envelope calculation. So that's the second skill. The third thing is, and this is the key, communication, communication, communication. So how do you interact? How do you interact with the clients so that their attention stays with you? Their attention stays with you. Because remember, you're not talking about a couple of crores or a few crores. You're talking about hundreds and thousands of crores. And when you're dealing with such kind of people, idiosyncrasies, their vagaries, their mood swings can be extreme. And hence, your communication, your interpersonal skill has to be superior to anyone. So these are the three key aspects which it takes for you to succeed in the world of investment banking.
Sir has told about the important three aspects one should look for investment banking, like how one will succeed ahead. These are reputation, technical know-how, and the communication. These are the most important thing one should look for and be gauge for getting a role into investment banking. It has been a wonderful, sir. So next question will go on for how investment bank functions separately for like in India versus foreign like US and Europe.
India investment banking has been very, very nascent. India's journey in the investment banking has been very, very nascent. Only 30, 40 odd years back, some of the MNC banks and SBI Capital Markets. So these are some of the investment banks which have been established. In India, generally the investment banking is only limited to the primary dealers. So PDs, primary dealer issuances, which is the government bond dealer. So government has PDs through which they do their issuances. Then you have got merchant bankers who get into the IPOs, the equity IPOs. So they get the primary issuances. So they take the company onto the bourses. So that's the second kind of. The third kind of market where it is prevalent is M&A advisory. So these are the three most simplistic way, if I have to say, which lies in India. Then you have got institutional equities, which also some of the investment bank houses, where you advise the FIIs and the DIIs on what to buy when you are looking for buying in India, then which businesses to buy, which stocks to buy on the listed side. So institutional equities, which generally deals on the listed equity space. Then you have got asset management, which is again mutual funds, which is portfolio management services, tailor-made solutions, etc. So that's the construct in India. But another interesting thing which is there in India is the back office of some of the biggest investment banks worldwide. What does that mean? So let's imagine, let's take a case. Make My Trip wanted to get listed on the NYSE, or let's assume there is Infi which wants to get listed with their ADR on the NYSE. What will happen? Or any other global company, let's assume Alibaba wishes to get listed, or Tencent wanted to get listed on the Nasdaq or on NYSE. There, the people will get the mandate from Tencent. They will once they got the mandate, all the regulatory filing will be outsourced to the outsourcing units in India. So they will do the regulatory filing, they will prepare the IM information memorandum, they will do all the compliance, they will do all the regulatory things. So they will not be front-ended, they will be doing the entire back-end job, and the client will never know that this work has been done by these people in India. So that's an interesting way for people who are only graduates or people who could not get through the investment banking for any reason. There is plethora of opportunities to start your career even in the back office of investment banking, because once you get an experience of 1.5, 2 years in doing all this, there will be opportunities where you can migrate into the international banks abroad, international investment banks abroad, because you will have a clear understanding of what it takes to make an IM, how it is regulatory, and if you are a reasonably good communicator, people will eventually put you into the front end role. So from a back end role, you'll come into the front end role. So that's a mega opportunity which India presents. So if you want to get into the wholesome investment bank, which is localized investment bank, you can enter there. But if you are not having that opportunity for some reason, don't get dejected, don't feel bad. Get into the back office if you are relatively hardworking, if you are perseverant, because remember, as I mentioned, you may have to work 16, 18, 20 hours a day, and you'll be paid handsomely. So don't worry about the money aspect. You'll be paid very, very handsomely, and you can start your career from there. And eventually in next 1-2 years, you will move into the front end, and then sky is the limit. So that's from the India perspective. In India, the challenge is debt markets are still very, very nascent. We only have wholesale debt market, and then there is private placement. And that's not very institutionalized. That's not very liquid. The only liquidity we have is in the equity markets, which is NSE and BSE. That's where the investment bankers come into play. But if you look at the West, there are a whole bunch of securities on the non-equity side where investment bankers play a very, very vital role. And I have to just to give you some perspective on the numbers. The total investment banking revenues last year in India were approximately $1 billion. How much? Approximately $1 billion. In 2020, the number was $1.025 billion. So roughly $1 billion in calendar 20 and calendar 21. 2018, it was $477 million. So you can imagine in a span of 2.5, 3 years, it has more than doubled. Now let's look at the West. I was talking about $1 billion. In US, the total revenues are to the tune of $140 billion. $140 billion, 140 times than India. And in US, you have got 50 top investment banks, which means 1.5%, 1.8% investment banks, the number who make 90% of these revenues. So you can imagine only 50 investment banks making nearly 120, 125 billion dollars in revenues. That's a crazy, that's a crazy number. So that's the degree and the quantum of growth which is there in the West in terms of investment bank is crazy. In India also there are huge opportunities. By the way, all of a sudden there is a vacuum in investment banking side in India. In India, last year, nearly 300 mid-level and top-level professionals have left investment banking for other job opportunities outside investment banking. So there is a vacuum, and if you guys are up for it, you guys can take the roles very, very quickly.
So while everyone has got an overall idea about the investment banking role, skills required, and also the how big industry investment banking is. So definitely one as a early stage professional would like to know how getting into investment banking would be a mega bucks for them.
So how can one make mega bucks moolah, right? That's the ultimate question. So very, very simple. Remember, investment banking or investment bankers deal with very, very large mandates, large sums of money. And there are less number of people, and that's why the work is very heavy. So unlike in a management consulting, if you're taking $1 million project, you may end up with 3 people or 4 people handling. If it becomes a 500 million project, you will at least have 40x of that or 50x of that number, right? In investment banking, it doesn't matter whether you are selling securities worth $500 million or $2.5 billion. It doesn't matter. The number of people remains same. So less number of people, large amount of commissions, large amount of money, and hence large amount of bonuses getting into your pockets. It's very interesting. The starting salary in an investment banking role in US is closer to $130,000 to $140,000. The starting salary. And in India, it is closer to between 15 lakhs to 20 odd lakhs. That's the kind of disparity you can imagine. So nearly 5x more money for a starting graduate in the investment banking space in the West. And that's why it's one of the most coveted jobs in the world, not in a particular location. So less number of people, large transactions, large commissions, lot of work, lot of perseverance, lot of managing your own personal emotions. You can't let go. You may be feeling really sulky. You may be feeling really bad from inside. Zip it. The client is the king, and the client has to be treated well, because multi-million dollars are going to come from there, and you keep smiling. So you have to manage your emotions, and that's where, and remember, ultimately, this is matching of minds, matching of expectations, matching of desires of two parties. And hence, if you are not calm, both these parties are greedy, and that's where you have to match them. And that's the spread, that's the work you are paid for.
Thank you. Now we'll move on to question answer from the participants. Participants, do feel free to post your questions in Q&A. We'll take up the question and answer session one by one. So Ank Khatri has asked, how has been your journey till date in the investment banking and generally?
I started my career, so I was lucky that I started my career on the debt market side. And at that point in time, the markets on the debt side were very, very nascent. And I started my career essentially on the securitization side. So me and a couple of colleagues of mine, we were the first ones to do credit card receivable securitization in the history of India. So we were lucky to get those mandates, and I was sheer lucky, and I was very, very clear that I want to do work where it enables large number of people, but it has to be meaningful, and that's where I started my career. And then opportunities kept coming by, and I kept taking them, and that has been the journey. So I won't say it is by design. only my entry, maybe by design, because I was adamant that I want to start my career with merchant banking. I was okay with debt or equity side, but I was lucky to get onto a good platform to start with. And after that, it has been, the opportunities kept coming by, and I just kept exploring everything in life. And that's how I grew.
Thank you. Arya has loved your jacket and he wanted to understand what are the major difference between individual stock investor and an investment banker apart from the scale they work on.
So the first thing is, individual investors, they use generally the broking platform. They don't have so much of expertise. They don't have so much of research. But when asset manager, that's what he's referring to. When asset manager does their due diligence, they have multiple legs to figure out the stock selection. So there is a set criteria. First, you use the algorithm numbers. Then you do the fundamental research. So you go and meet the distributors of the companies, the channel checks, the wholesalers, the retailers, the ex-employees, the customers. Then you talk to the board, then you talk to the management, then you go and do the inspection, then you understand. So it's a whole bunch of fundamental work, fundamental research, where you spend hours and hours to understand the business, and then you look at the future growth, you estimate, you make models, you take various scenarios, and under those various scenarios, and then you allocate the money. So it's a much more detailed process. So for an asset manager to buy or to buy a stock, to enter into a stock, it is almost 3 to 6 months of journey before even it is proposed into the investment committee. However, for an individual, it's very, very simple. You like the promoter, you have heard a couple of reports, you read a couple of reports, and you are convinced that, hey, this is good, and you just go and buy in, right? But when you are dealing with third party money, you are the fiduciary custodians of those guys, and hence you have to be very, 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 very cautious with their money. And that's where you can't afford to have accidents, because as I mentioned, reputation is the key. Once the reputation gets marred, you are equivalent to dead. So
next question is, why people are quitting IB jobs?
So a very interesting one. So people are coming under pressure. People are obviously, as I mentioned, that you have mega bucks. So you wouldn't have imagined the kind of money your parents, by the time you will turn 35, and if you enter now, by the time you will turn 35 or you will turn 40, you can be driving the most swanky cars, the most swanky ones. You can think about it. Okay. It can be Maybach, it can be Ferrari, it can be Lamborghini, whichever ones. In the West, they drive it. I'm talking here 35, 40, they drive it at 25. So that's the difference, because I told you the starting salary is 5 times more, right? Second is, you can own the most luxurious property at Bahamas. You can own at Nepean Sea Road, Pedder Road, which is supposed to be one of the most expensive piece of real estate in India. So you can do all that, but clearly what happens, it's a high pressure job, and after a point in time, once you have achieved, then you're starting to think that, okay, I don't want to make more money now, I want to enjoy, and you get settled into other jobs. So that's number one. Number two, what's happening is these dot-coms. So remember, as you work on the IPOs, as you work on the large mandates, you're dealing with the CEO, the CFO of these big companies. You start having a personal rapport, and then they want to call you and switch roles from an investment banking into the strategy roles, into the financial modeling role, or how to grow the businesses, because investment bankers keep looking for growth, right? They have to give ideas to the companies. How do you grow, right? And that's where the switch happens from the intermediary to the client side. And that's why a lot of people are switching jobs. So these are the two reasons. Third thing is, investment banking generally doesn't give ESOPs. It's all moolah, right? You make money, you get tons of money. You make money, you get tons of money. But if somebody wants to build slow and gradual business, so a lot of people are also moving to the ESOP culture, which these dot-coms, with these internet businesses, with these SaaS businesses are giving forward. So these are the three reasons.
Yeah, interesting, sir. Apart from this great resignation happening across India post COVID-19, and
Right.
across the world as well. Rohan Bhatt has asked someone who is looking to join an MBA college, what should they do or learn at this stage to end up in investment banking?
So very, very simple. Take as many subjects in finance, take as many subjects in math, take as many subjects to do with numbers. So that's number one. Number two, you take your valuation classes very, very seriously. And after your valuation class is over, probe with your professor even more and more and more. Because remember, your professor will have plethora of knowledge and case studies. So start reading. Not everybody would be interested, because some people are interested in the sales role, some people are interested in the marketing role, but some people are interested in the pure finance, corporate finance role, or in the management consulting roles, or in the private equity side. So all these roles may not require so much of valuation. Private equity, although also requires, but rest of the roles may not require so much of focus on valuations. So you, as I mentioned, understanding valuations has to be the key. You got to read more and more M&A cases, which are all available on Google, and the way the valuations have been done, and start practicing them every day, every week. You will get a grip on it, and that's it.
Interesting, sir, that we have covered this almost majorly in our conversation. Also, apart from this, similar to the one we have previously answered, this is from Arya Kulkarni. How to get into investment banking after undergraduate?
Very, very simple. Interesting question. You can do it. Yes, you can do it. What you need to do is, you may not get into the front end investment banking. After graduation, you can finish your FRM, financial risk management, or CFA, which you can do parallelly. If you're not interested in getting into the postgraduate, you get into a job, finish this, and then you can get into an investment bank. If you want to get into the local domestic investment bank and get into the front end job. Otherwise, the best thing to do is start applying left, right, center to all back office valuation, back office execution roles in investment banks all across, whether it is Goldman Sachs, JP Morgan, Morgan Stanley, Lazard, Citibank, everywhere. There are, all these guys have even McKinsey does a lot of back office work in India as well. BCG consulting companies also do. What it will do, it will give you a sense of how the valuation happens, how the execution happens. And once you get thorough in next 1-2 years, so you make a lot of money while doing this, plus you keep continuing. So it is a lot of hard work, plus you start doing your CFA, FRM, and once you have completed, you can get into the front end. Or if most of the MNC companies give you an opportunity to go abroad and then work. So you can do a part-time MBA internationally or in domestic, working professional MBA along with your job, and then move into the front end role. Your career is made.
So next question is from Vijay Ganesh. He has asked, when we act as a venture capital from India and try to invest in US or Europe in upcoming technology markets, is there a chance for success?
Absolutely, yes. See, the only thing you have to think through is, when you are investing, you have collected, so you have to, it doesn't matter whether you are in India or you are in abroad. Venture capitalists can be anywhere in the world. You can be an Indian, you can be a global, doesn't matter. You have to see where you have raised the money. Essentially, that's the key aspect. In what currency your money is, where are your investors sitting? If all your investors are in India, and if all your investors have given you INR, and then if you're sending the money outside and then investing into the technology, you are running a currency risk. You are also running a lot of things which can be unprecedented, right? Hence, the better thing to do is, you have enough and more going in India. You start in ventures in India and you will have lovely experience. However, if you have a company in India, venture capital, you can get a sister concern in Singapore or in Mauritius. Mauritius has extremely good norms. Singapore has extremely good norms. If you establish companies there in these two jurisdictions, and then open a sister concern and raise the money internationally and get the money into these jurisdictions, then you can invest across the world as well. But there is no caveat. However, it's difficult. Why would a global player come to you only for money in India. Doesn't make sense. Doesn't make sense. When the market for that entity is also abroad, everything is happening abroad. Why would that come? Why would that come to India? Having said so, there are a lot of VCs now in India. What they are doing, instead of directly identifying businesses, they are investing into the secondaries. So they will invest into the secondaries of, let's assume, Vivo worldwide. They will invest into the secondaries of let's assume Uber. They will, so all the international plays which exist there, they will invest into the secondaries of them or the unlisted businesses in the West. So they will start doing that rather than sourcing businesses, because deal flow also will become a challenge when you are sitting in India and you are looking for businesses coming from outside.
Someone has asked, should I do CFA before doing MBA in order to become an investment banker?
Absolutely, yes. So CFA and MBA, there is nothing like you have to do an MBA and you have to do a CFA. The idea is, if you're already a graduate, please go ahead and finish your CFA. CFA is anyways exams. That's about it. You have to register, you have to study and do exams. Don't waste your time. Keep doing your either MBA or start doing your job. Don't waste your time. Time is the most precious wealth. And investment bankers never waste their time. They never treat time cheaply. Hence, it's important that you don't waste your time. Either you do your CFA, and if you are into a job, keep doing your job. If you want to do your MBA, keep doing your MBA and do your CFA. So don't waste time, please.
Sure, sir. Shayan has asked, how can an engineer enter the world of investment banking?
Beautiful. So the engineers are most sought after in investment banking world because they have a grip on numbers. So nothing, you don't have to learn about the balance sheets. You don't have to learn about the P&L, the profits. You have to learn how businesses are run. Very, very simple. So you have to get an understanding, whether you are an engineer or not, you understand how a biscuit is manufactured and how the biscuit makes money, how a biscuit company makes money. That's the basic understanding. So you have to get the understanding of how businesses are run. That's number one. For managing the books of accounts, there are chartered accountants who can do that job wonderfully well. But for you to enter, so that's number one, you have to get the understanding of business. Whenever you are doing anything, understand how that business originated. So let's assume you guys are all studying how the business of education works. You guys are all studying somewhere, right? And if you are studying in a B school or in a undergrad, there is some economics. Otherwise, how would this company, how this business school or how this undergrad school thrive? So what is the economics behind it? How they are making money? How can they achieve scale? How they can be more profitable? So that's number one. Number two, start again. I'm repeating this, which I repeated in the beginning. Valuations. How do you value the companies? And not only the traditional businesses, not the brick and mortar companies, also the SaaS companies. The platform companies, how do you value the platform companies? How do you value the IoT companies, Internet of Things, right? So those are the things which you have to solve for. And if you start reading them, and you have to be regular, whether you eat or sleep, doesn't matter. You have to read about it again and again and again. And trust me, in next couple of years, you will be in part of the investment banking world.
So last question is about ultimately a different question. What are your thoughts about crypto and crypto after 30% tax in opportunity?
So if people didn't realize this beforehand, the government had already, before they formally announced, when you're making money, you have to pay tax. And it was always the case that any income which is not accounted from anywhere, it is income from other sources, and income from other sources is always taxed at the marginal rate of taxation, right? Now they have made the crypto, which is at 30%. So what they are trying to essentially say that please don't gamble, please don't speculate, because crypto is not fundamentally driven. The factors which impact crypto are beyond your control. You're just speculating and you're putting an algorithm behind it. You're just trying to being smart. But being smart is a good thing, but you can lose also tons of money, and that's what government is trying to do. So it is saying that please don't be cheeky with crypto. If you want to progress, then you should progress with NFT. So start doing non-fungible tokens, start doing your own stuff, but don't start trading in it. Use crypto to your advantage. Don't get burned. If you still wish to speculate, but it's not very encouraging thing. The government does not like, and ultimately government is talking about the virtual currency, virtual rupee. So that's going to come soon, and also there you can speculate a lot of it. So that's something which you can do essentially.
Okay, sir. Thank you. We'll end the session here. It was most enriching experience while hosting you and getting a more idea about investment banking. And I hope every participants have got their questions answered. Do feel free to reach out to us in case you have any issues. We'll personally clear your doubts later.
Thanks, Pooja, for hosting me, and thanks, Master Union, for being such a wonderful, wonderful set of people. And guys, if you still wish to know anything, you can connect with me on my LinkedIn, on my Twitter handle. And if you have any further questions, I'm happy to guide you on your journey to become one of the best investment bankers. Because remember, your focus, your attention, your acumen can change the world, can change the planet. So believe in yourself. Jai Hind. Good day.
Yes, sir. Thank you. Thank you, everyone.